Welcome back to the Morning Show here on the Raj News. I am Adesua Omoron.
I'm Rufai Hussaini. Great to see you again, Adesua.
And I am Shaitan Atigari.
And great to see Shaitan.
Great to see you too.
We begin in Nigeria, where President Muhammadu Buhari has signed the 2020 finance bill into law.
That's right. The bill aims at aligning Nigeria's tax system with global best practices and improving revenues for the government. It also seeks to encourage small-scale businesses and more investments in infrastructure.
Now, in November last year, both chambers of the National Assembly passed a finance bill. The law seeks to amend 7 tax provisions and make them more responsive to fiscal policies. Arise business analyst Bode Ososami, who has been covering this story, had this to say about the bill.
The signing of the 2020 finance bill by President Buhari, I think, is the most significant measure we've seen so far, particularly in addressing the fiscal gaps for the Nigerian government. It's already well known that the level of payments of taxes, when you look at VAT to GDP ratio or even the overall tax to GDP ratio, way below the average, even from a West African regional perspective, way behind what should obtain. And it's clear that there are gaps in legislation and in execution and in implementation that need to be addressed. In most countries, there is an annual review of the tax code alongside the budgeting process, which allows for more dynamism, more changes with the budget. And in Nigeria, that was not the case. But from now on, Nigeria will now have a more regular review of its fiscal structures going forward. So as the budget is announced, it will also have revisions to the tax terms. And the bill includes very material changes to value-added tax, for example, companies' income tax, personal income tax, stamp duties, and indeed petroleum profits tax. And it's seen as a much more progressive tax in terms of how it meets best practice. But of course, the importance is for it to be very carefully executed so that you can get the right impact on financial inclusion. And one, of course, will see there are certain areas in the tax bill that still require some thinking through, particularly to ensure that they're properly put in place. But to go through some of the main amendments, I just summarize a few of them. Increase in the VAT rate from 5% to 7.5%. And of course, there's also that 25 million naira threshold for taxable businesses in terms of those who are required to file returns. Banks, particularly in the area of personal income tax, banks are now required to obtain a tax identification number from individuals as a precondition to opening the bank account. Of course, one has to be very careful here, because when you consider that the majority of financially excluded Nigerians are not taxpayers, and this may, of course, scare them from coming into the financial net. But these are types of things that you see in most developed economies, and I think this is, of course, the way to go about it. There are also some rules that have been introduced, introduction of new commencement and cessation rules to eliminate double taxation. That's with respect to companies' income tax. And also with respect to petroleum profit tax, there's a removal of exemption of dividends paid out from withholding tax. So broadly, there are quite a few other details here, but the important thing is not just the fact that Nigerians will be paying more taxes, but there has been an attempt to protect the small-scale industry from heavy taxes by giving a generous threshold, I would say, in terms of who is supposed to be paying taxes and who is not. But the key thing, and I really must emphasize this, is execution. Execution is very, very, very important. Processes all over the world, you can pay your taxes without going anywhere. You can pay your taxes from your study, from your office, get all the required documentation sent to you electronically. There is really no need to go to any government office with respect to tax. And that's because the processes are largely automated, heavily simplified, And there's also a lot of training that is given through computer-based training to taxpayers here in the UK, for example, to make it easier for people to understand how to pay their taxes, what it entails, and they're guided with a lot of communication to assist the process, making it more friendly. So you get that pull. People want to pay their taxes. Of course, there's also the broader issue of trust and the fact that Nigerians keep saying they're not getting anything back for the taxes they are paying. But I think it's important to realize that governments cannot progress in any environment if you have very, very, very low tax rates, or if you have a large proportion of those who should be paying taxes not paying their taxes. So that what the government, I believe, is doing here is essentially doing what is obtainable in every other part of the world, and Nigeria is really just playing catch-up. So I would say the focus should be implementation, making this as easy as possible, as friendly, user-friendly as possible, and of course allowing time for Nigerians to catch up with this law. I think kudos to the government, because this is certainly a big, big improvement from what we used to have before. And if this is implemented, definitely the fiscal position of the government will tremendously improve.
All right, thank you so much, Bode, for that very good analysis there. Kunle Ogunbanwo, tax partner at Deloitte, now joins us to discuss the signing of the 2020 finance bill into law. I mean, let's start from the parts Bode extrade, and we're going to be picking all of this one by one. Let's start with stamp duties, for instance. Somebody was paying money in the bank yesterday. It was paying, I think, 850,000 naira, and the stamp duty was about 3,000 naira or more. Yeah. What is happening?
So essentially what the Finance Bill 2019 or 2020, as the case may be, I mean, we are yet to see the signed version of the bill, so we don't know what it will be named, whether 2020 Finance Bill or 2019 Finance Bill. So what it seeks to do is to try to harmonize the Nigerian tax system, ensure that the tax laws speak to our policies, so that when we say we want to do something in Nigeria, we are seen to be walking the talk. Yeah. Now, we are all aware of the 50 naira stamp duty charge that I think what is typical for us to see is that when you go to the fuel station to buy fuel, they charge you extra 50 naira or whatever you do. So that's for every transaction over 1,000 naira. Now, not as something as prescribed by CBN. Before now, it hasn't been expressly stated in our Stamp Duties Act. But what did Finance Bill 2026 to do is to now specifically prescribe that for every online transactions that's 10,000 naira and above, you have to pay a stamp duty of 50 naira. And that's the stamp duty that's required on bank transaction. So if somebody went to the bank yesterday, made a lodgement of 800,000 naira and had to pay some charges, I can tell you that most likely was not stamp duty. Maybe there were other charges that were being charged by the bank.
I mean, I saw you nodding your head there when Bode was talking and he spoke about the execution. I mean, it's good to have all of these written down on paper. Yeah. And there are lots of policies that, if implemented, would help the Nigerian people, especially those that come from a low economic background. Yeah. But how do we see through this execution, the implementation of this new law, of this new law, basically?
Yeah, so Nigeria generally, I mean, we typically say there are three pillars to the tax system in Nigeria. There's the tax policy, there's the tax laws, and there's tax administration. For you to have an effective tax system, these three pillars must work together because the tax system sits on this tripod. So if one of the legs is off, the system will fall down. So typically, generally in Nigeria, our tax administration has tried to, as much as possible, implement a tax law. We've seen a lot of reform being come through in the recent times. So I believe that with the tax laws now being promulgated, the tax laws have been amended, I believe strongly that with the right mindset from the tax authority, which we have seen happening in recent times, I believe strongly that this amendment of the bills will be effectively, administered. I don't see us having really any issue because we're actually seeing a gap in terms of the tripod that the tax system sits on in the past has been between the policy and the laws, because there has been some kind of disconnect.
What's the challenge? What's that disconnect? I'd like to know it because it's big out there. The policy and the law says this. The policy says one thing, the law says the other one.
Okay, so the reason for that is simple. The policy was a document that was come by the executive. So the executive put together a committee to say, look at the Nigerian tax systems. What are the things that we need to do as a nation for us to have an effective tax system, one that works the way we want it to work? That's what the policy says, but it's not binding. It's not the law. So for the policy to come to life, we need laws that will speak to the policy. That talks to National Assembly. For you to have a law, National Assembly must sit and pass a law. Okay? So when you then add those laws that speak to those policies, you then need the tax administrators, the FRS, the LRS, of this world, to administer the law as prescribed. So before we add this finance bill this year, last time we had a kind of the semblance of an holistic review of our tax laws was 2007. Now, we had the first tax policy in 2007, and that tax policy was amended in 2017. We haven't had any revision to our laws or those why. Clearly, those laws did not speak to the policy. Now, what this finance bill tries to do is, as much as possible, to align some of the provisions of our laws to what the tax policy says. Now, before now, what executives are also trying to do on their own before the finance bill came into force is to try to see, can they use some executive orders to modify some aspect of the law? I mean, but the power to which, the extent to which the government can use executive orders to modify the tax laws is limited because, tax law must provide that power for you to use an executive order to modify a particular section for you to be able to do that. And those powers are restricted within the tax law. So now that we have this, the finance bill 2020 being signed into law, we believe that with the right administration that we have in place, I mean, I won't say our administration is 100%, but I would say they've been on track. And there have been significant improvements in tax administration over the last maybe 8 years thereabouts. Okay, so the administration we have, and the policy, and the law now kind of speaks to the policy. I think the tripod on which the Nigerian tax system sits is a bit more balanced now. We should begin to expect a kind of improvement, the kind of statistics I want to see in our tax system, which we begin to expect them going forward. Okay,
so it's work in progress. I'd like to ask you a couple of questions because although the horse has left the barn, we seem to have some controversies, brewing as against this law. For instance, the organized private sector is raising an alarm that the private sector should not be seen as a cash cow. I wonder what your take is on that. And then Rufai started off by pointing out one of the 7 laws, tax laws that have been revised in this bill, which is the stamp duty. But there are so many others. The VAT has been the most controversial, but there are others. And I would like us to talk about that. But I do hear we might be going for a break. So you want to start to comment, and then I'll interrupt to go on that break. So start with the concerns of the organized private sector. For instance, the Nigerian Association of Employers Consultative Association, NECA, particularly says we are not a cash cow.
Yeah. So the concerns of the private sector is genuine. There's no way in the world where a taxpayer will willingly say, I want to pay tax or I want to pay more taxes. Okay? So for the private sector to be concerned that they say that you are promulgating the law, you are bringing out the law that will make us pay more taxes and we are concerned about it. It's a genuine concern. Okay? However, if you look at these laws and look at the rates that have been introduced in the laws and all of that, you want to ask yourself. I'm sorry, and now I have to butt in, and we'll go for that break, and we'll come back to talk some more about the concerns raised. You're watching The Morning Show here on the Rise News. Great to have you back. You're still watching The Morning Show here on the Rise News, and we have Kunle Ogunbanwo, tax partner at Deloitte. He's been speaking on the finance bill recently signed by President Muhammadu Buhari, and that was related through his Twitter handle. Thank you so much for staying with us. Now, I asked you before that break, I was asking about the concerns of the organized private sector. NECA, for instance, LCCI has also raised concerns about the VAT, saying that this will further impoverish businesses who are struggling with
high cost of electricity and energy, exclusion from the Forex, official Forex window, and other things. So you said these concerns are genuine. You're explaining on that.
So I said the concerns are genuine. They have the right to say we don't want to pay more taxes. But however, if you look at it from the government's perspective, vis-a-vis the general tax landscape within Nigeria, and again, Nigeria doesn't operate in an isolated world. I mean, Nigeria is a community of nations. And so if you look at our tax rates, if you look at our tax system, if you look at our tax regime, vis-a-vis what operates around us, let's start from Africa. Let's go outside of Africa. Are rates excessive? Are they too high? The answer will generally be a no. So we're talking about VAT being increased from 5% to 7.5%. The only areas in the world where you will see a consumption tax rate at 5% are sales of good tax, are not VAT. So the next, you look at the West African bloc, for instance, the nearest VAT rate to Nigeria as in Ghana, which is 14%. So VAT, even at 7.5% VAT rate, our VAT rate is still very low compared to some other neighboring African nations. And someone that is knowledgeable about VAT can argue to say that we don't practice a full-blown VAT system. And the reason for that is because what you can claim as input is restricted in Nigeria. In most other nations where VAT is practiced, you can claim all your inputs. So one of the things we practitioners have been advocating for, for a very long time now is to say that we need to practice a proper VAT system. So we can increase our VAT rate to reflect what happens around us, but then we also need to include the threshold as to what taxpayers can claim. Now, what has been done now is that the rate has been increased slightly, but what is claimable has not been adjusted. So I expect that by the time we're having a kind of holistic review of our VAT laws, that should be the next destination to say that if we want to increase the rate to maybe 15%, 10%, whatever it is that considered to be applicable or to be appropriate, but then we increase the threshold of what you can claim as offset. So if you put all these things in context, generally, I do not think the Finance Bill 2020 is generally going to impoverish Nigerians.
Another concern raised by economists and private sector is that there's a risk when you increase your tax during slow economic growth, such as what we are recording now in Nigeria with a tepid growth. There's a risk for you to increase your tax now.
Yeah.
How about that concern?
So you can look at it from that perspective. But the question I would then really ask you is that does the Finance Bill really seek to increase taxes? Okay. Because if you look at the provision, like I said, there are about 7 laws that are being amended.
Yes.
Look at CIT, for instance. What is the tax rate of CIT today? 30%. Based on the Finance Bill, what is the rate? 30 or 20 or 10, depending on the size of your business.
Or none.
So 30 or 20 or 0.
Or 0.
Yes. Or 0, depending on the size of your business. If you look at VAT, today VAT rate is 5%, it's being increased to 7.5%. That clearly there's an increase in VAT. However, if you look at the list of exempt items, it's been significantly expanded.
Yes.
Okay, particularly things around basic food items. So there's a clear definition of what constitutes basic food items, and it seeks to exempt most of what we consider to be the staple food around this place.
But something, too, that we consider to be staple.
Yeah.
It might not be staple food, but staple for the growth of the economy and the existence is electricity.
Yes.
That VAT tool will be on. And owing to the conversation, when you hear people talk about cost-reflective tariff that might kick effect anytime soon, we don't know.
Yeah.
So a VAT 7.5 obviously increased electricity charges.
Yes.
Obviously. And to couple with that, I also want to talk about petroleum energy, very important part. Taxes for petroleum, owning companies, about 85%, correct me if I'm wrong.
About.
And also on their dividends, now they are paying 10%. So when you look at what the tax on their dividends and the taxes on their gains is about 95%.
Yes.
So what is happening?
So what the I'll start from the petroleum profit perspective. So what the law seeks to do, what the finance bill seeks to do, is to remove the kind of discrimination within our tax laws. Now, every other company that operates business in Nigeria, apart from petroleum industries, are required to pay tax on their dividend distributions, required of whether the profit has been taxed or whether it's taxed or not. Okay? So, and if you also then consider the fact that the dividend tax on dividend is not the tax of the company, it is the tax of the shareholders. So, so when you are paying to the shareholders, the company is required to source the tax of the shareholders. So what that provision seeks to do is just to harmonize. So just say that every other company is paying taxes on their dividend, but petroleum companies are not paying. I mean, that's kind of discriminatory, even though the rates are different. But again, the rates are different because the regimes are different. What the businesses they do are different.
But 85% for a petroleum sector,
and it's not
that
flat,
is fast
5%. It's
waning.
It could be 85, it could be 50, depending on the regime in which you operate. So some petroleum operators actually pay 50%.
I hear there's a leeway too for insurance companies. Can you explain that? You know, there's a leeway in taxes too for insurance companies.
So there are some confusions. I will put some contradictory provisions in the law right now in terms of taxation of insurance companies. And there are some, again, some negatively discriminatory provisions in the law. For instance, insurance companies, until this new finance bill is passed into law, were not allowed to carry forward their losses. So you go into business, you have losses, you are not allowed to carry forward beyond 4 years after the year you made the losses. Whereas every other company in Nigeria was allowed to carry forward indefinitely. And that has been corrected. So insurance company cannot carry that forward their losses indefinitely. There are some provisions for minimum taxation of insurance companies. So whether you make losses, I mean, generally there are provisions for minimum taxation in our tax laws, but there are some specific, there are some others that are specific to insurance companies. So for a typical insurance company, when you prepare a tax computation, you prepare the normal tax computation that every other company would do. You prepare the normal minimum tax computation that every other company will do, and then you prepare a specific and special insurance company minimum tax computation because you're an insurance company. Now, you don't have to compare the taxes you arrive at across the 3 bases and pay the highest. Now, that's discriminatory for insurance companies. That has to be taken care of. So if you look at this bill, even though one of the objectives of the bill is also to raise tax, but generally, if you look at the entire cost of the bill, I think there are more gains for the business community and for the Nigerians than the pains that are in it. And again, like I said, there's nobody that's willing to pay tax. No matter how, I mean, even if you say the tax rate is going to be 1%, it's going to be paying for somebody. Nobody likes to pay tax, but it's something that needs to be paid at the end of the day.
In your opinion, how does this finance bill help the 2020 budget? I mean, it was submitted about the same time to the National Assembly. How does it help? We know that taxes, the increase from 5% to 7.5% is supposed to also help the recurrent expenditure as well. But we know that only 15% actually goes to the federal government. Yes. How does it help it?
So if you look at the way the finance bill generally has been structured, now it's not just the VAT increase that's aimed at bringing more revenue to the government. There are actually some other provisions as well that aim at bringing more revenue to the government. You mentioned, if I mentioned the one about the withholding tax on dividends for petroleum companies, as one example. And the other example is digital economy. So there's been this general arrangement. I mean, when the Nigerian tax system was passed, there was nothing like internet. There was nothing like digital economy. Now, since the advent of internet, there has been no attempt to modify the act to catch digital economy. Yeah. So the current tax rule before this finance bill 2020 that in terms of taxation of businesses seeks to tax brick and mortar businesses, so that if you do not have a physical structure in Nigeria, it does not matter whether you're making generating revenue from Nigeria or not, you will not pay tax in Nigeria. So one of the provisions of this bill now is to say that for non-resident companies, that's for those companies that do not have physical structures in Nigeria, you will be liable to tax in Nigeria provided you have significant economic presence in Nigeria. Now, Now imagine what will happen to the likes of Amazon and all those companies. So supposing they have significant economic, so nobody has established whether they have significant economic presence or not. But the point is that the moment you are begin to be seen to have significant economic presence in Nigeria, you may then have to pay tax in Nigeria. And that's expected to raise significantly the government tax take.
Very quickly, we have about a minute to go, Mr. Ogunbanwo, but I would like to ask you, the target for the VAT increase in this year is 2.08 trillion naira. How feasible is that? Realistic?
So I haven't seen the analysis of how it is calculated, but I believe that whatever would have been done, they would have done a template 25% plus 1.5%. What is the difference? So if government had done the proper homework and come to say that they expected to get 2.5 trillion naira, I believe it should be achievable.
And then finally, the personal income tax and the banks.
Yes.
And the tax income number, the tax identification number, what's the import of that now? So, because we do hear that's not new, it's existed, but now it's going to be enforced.
It's existing, and there's a misconception as to what the exact provision of the law. Okay, what what the finance bill says that for every individual that wants to open an account for the purpose of carrying on a business, you are required to provide a TIN.
Yeah.
So if you are opening your personal account for personal use, you are not required to provide a TIN.
Good.
So if for opening an account for purpose of carrying on the business, you're required to provide a TIN, and that is already happening right now.
I'd like to thank you so much, and it's good you threw more light on that confusion there.